Joining us now is Evan Lucas, the Chief Market Strategist at InvestSmart. Evan, good morning to you. Thanks as always. It's been quite the few weeks, but seems to be getting worse, doesn't it, the coronavirus affecting business markets?
Yeah, and I think that's probably, it started last week, Pete, when we were talking about the fact that Apple came out and told us the changes to them. It's now, as you said, it's also last night for the first time, in terms of, if you can believe the official numbers, the first time that actually there was more cases outside of China than inside it. So we saw 411 cases reported in China, and it's 429 cases outside. So it's why it's now starting to become a bit of an issue. The other thing that's starting to happen now is they're actually starting to get economic stats around changes that are actually happening to things like supply that we've also been discussing. So we actually got physical figures from China with regards to something like televisions. So they actually report that quite readily. They manufacture around about just shy of 2 million televisions every month and export that. So far, in February alone, they've only managed to do 100,000. So that is just an incredible change in terms of the supply side coming out of there. They also then talked around the car numbers in terms of parts. Car parts have fallen over 97% in terms of their exports. So it does now actually start to show you physically the impact of corona in terms of supply side and the economics. The health side is horrendous, don't get me wrong, but the way I can comment on it is through that. And that's where the spread is happening. You also then get, and having a look at Europe, the Italian scenario is becoming probably the biggest headache with regards to the economics as well, because the European Union has free flow of borders, and clearly the spread out of Italy is ramping up. We saw it into Spain, it's now moving into Austria, you're seeing it into Slovenia. And what is really feared is if it all of a sudden becomes an epicentre in somewhere like Germany, and Germany's manufacturing is the highest end manufacturing in the world, high end things like bionomics, highest end with regards to things like car manufacturing. And if you saw a real slowdown like what China is currently reporting in Germany, the impact on the European economy would be ginormous. They are a huge consumer of everything. And therefore, if you've got the issue around the supply side, therefore spreads to people's confidence, it hits everything. And that's what the real fear is now from an economic side anyway, is that Europe now becomes the epicentre, and they are a bit different because they're not necessarily the producers like China is, they're the consumers, and that would be a big double whammy that economics would find very, very hard to cope with.
Free movement across the borders, though, which will be a huge problem in trying to contain this virus. The markets, Evan, seem to stave off and at least resist the downturn for so long. While this was contained to China, we've had people like Larry Fink say that perhaps business need to rethink their supply chains into China. How realistic is that?
No, it's very realistic, Laura, and that's the question that I think needs to be asked. For the first time in China's history, something you never want to be lugged with, again, from the economic, is have basically country risk, and particularly from a bio perspective. China now has that scenario. If you have a look, out of the last 8 major epidemics, almost bordering on pandemics, 5 of them have originated in China, and the other 3 have been either in the Middle East, in places like South America, or you're coming out of Africa. So Ebola, Zika and MERS are the only other 3 outside of the 8. And China has that. So we already know, you've been hearing it also from big end manufacturers, particularly car producers, that are suggesting that country risk now needs to be diversified. They are now looking at going forward, not in the next sort of year or even the next 3 or 4 years, of whether or not they diversify outside of China and manufacture in places like Vietnam, places like India, other places that actually have a Chinese sort of metric in terms of how they look, but don't possibly have the China risk that they're now facing.
It's amazing that we're talking about this again, because we were only talking about this a few months ago during the US-China trade war, that you know, where businesses should be thinking about changing those supply lines and an over-reliance on China. But just quickly, Evan, a bit of talk this week over whether Australia could slip into a recession or not. Are you going there? Do you think it is as dramatic or as possible as that?
Again, I will answer that with, to be honest, I don't know. And the reason I say that is because this is so incredibly fluid. So if you look at our big industries so far, things like coal, iron ore have actually remained relatively buoyant. So net exports may not drop as hard as they can. What is coming out, though, and it sits about 5, is tourism. That is being decimated. So you put the wildfires, then you put coronavirus with it. That is what is unknown. Now, there are expectations that you've actually seen already the decline from Chinese tourists in February has gone from around about 157,000 this time last year to 12,000.
Yeah, amazing.
So that's the unquantifiable number, is the impact on tourism, because that actually spreads through a whole range of things for gross domestic product to answer that question, because they sit in consumption, they sit in net exports, etc., and how much that affects is unknown. The other part of this is whether or not it hits consumption because people start to not go outside, people start to basically, minimise their movement of travel just on their general day. All of that filters into it. So it's possible. We were already seeing pretty bad numbers yesterday from construction. Fourth quarter GDP looks like it could be slower than expected, and therefore it may slip into negative, and everybody was already expecting Q1 to possibly be a negative quarter. So that would therefore mean, technically, we could actually have a recession being told to us in May this year when we get first quarter GDP out. So there is a chance. Again, I don't want to put my hand up and say it because it's such a fluid situation, but there's reasons why people are saying it, and it's justified.
Evan, Lucas, thank you.
Thanks, guys.